Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news data out of the world's largest economies continues to unimpress. The latest PMI survey for the US in September shows both their factory sector with a limp expansion and now their services sector is showing the same. This survey suggests that the US economic engine is worryingly close to a stall. However, the August Chicago Fed National Activity Index suggests the direction forward might be a bit better. In Canada, there was an unexpectedly positive wholesale trade data series out overnight, with consumer items, especially cars, helping lift this index. In China, they're going into a lockdown period ahead of the 70th anniversary of the Chinese Communist Party. Real news will be scarce, overwhelmed by rivers of propaganda. But Chinese buyers did purchase 10 shiploads of American soybean last week, has been revealed. And Beijing has instructed local governments to submit their plans for issuing special purpose bonds as soon as possible. The directive signals that central government policymakers are in a hurry to square away funding for growth-boosting infrastructure projects amid fresh signs that growth is slowing. In Europe, the September PMIs are suffering a broad-based fall in both the manufacturing sector, which was contracting faster, and services, which is now barely expanding. That had Mario Draghi lamenting that the Eurozone economy faces a prolonged sag. In Australia, their composite PMI is expanding in September, cancelling out the unexpected August contraction. Essentially, it was their service sector which turned up, while their factory sector contracted. There are early signs that the combination of tax cuts, rate cuts and rising dwelling prices is having a positive impact on the services sector. And still in Australia, the big banks there are lowering their mortgage serviceability test rates. They seem to have cut it to 5.35% from 5.75%, the rate that borrowers are assessed with their ability to withstand rising rate pressures. US Treasury 10-year yield is lower today at 1.71%. Gold is up. It's up $6 to $1,523 an ounce. US oil prices are a little firmer too, and just on $58.50 a barrel. The Brent benchmark is just over $64.50 a barrel. And the Kiwi dollar has firmed slightly this morning, off its lows and now at 62.9 US cents. On the cross rates, we're firmer too at 93 Australian cents. Against the euro, we're at 57.3 euro cents. That puts the trade-weighted index back up to 68.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.